The highly anticipated Bitcoin ETF, exchange-traded fund, has been delayed multiple times, leaving many investors and enthusiasts wondering what's causing the holdup. In this video, we'll delve into the reasons behind the delay and explore the potential implications for the cryptocurrency market. From regulatory hurdles to market volatility, we'll examine the key factors that are holding back Bitcoin ETF approval. Whether you're a seasoned investor or just starting to explore the world of cryptocurrency, this video will provide you with valuable insights into the current state of the industry and what the future may hold. So, what's really holding back Bitcoin ETF approval? Join me as I dig deep into the reasons holding back Bitcoin ETF approval and see if I can uncover the truth behind this financial mystery. Did you know that while Bitcoin has been around for over a decade, the US has yet to approve a spot Bitcoin exchange-traded fund, ETF? This raises a critical question. Why is the regulatory path for such a groundbreaking financial product still fraught with challenges, and what does this mean for the future of cryptocurrency investments? At the heart of the delay lies the SEC's concerns about market manipulation. Bitcoin's decentralized and largely unregulated trading environment makes it susceptible to price swings and unfair practices, which could harm investors. Compounding this issue is the lack of robust oversight on many cryptocurrency exchanges, where transparency and regulation are often minimal compared to traditional financial markets. Custody and security are additional hurdles. The risk of hacking or theft associated with Bitcoin storage has been a long-standing worry for regulators, who demand solid safeguards to protect investors' assets. The SEC is also cautious about investor protection, given Bitcoin's notorious volatility and the potential for steep losses, especially for retail participants. The SEC has expressed doubts about whether the Bitcoin market is mature enough to support a stable ETF product. Legal and policy uncertainty surrounding cryptocurrencies further complicate the approval process, with regulators waiting for clearer guidelines and a more consistent framework. While Bitcoin futures ETFs have made it to the market, the SEC continues to hesitate over spot ETFs, citing concerns about price reliability from unregulated sources. Recent high-profile filings, like BlackRock's bid for a Bitcoin ETF, have brought fresh optimism to the conversation. If regulatory concerns about oversight, market maturity, and investor protections are addressed, the approval of a spot Bitcoin ETF could mark a turning point in how mainstream investors access cryptocurrency. Until then, the wait continues, leaving many to wonder whether the future of crypto investments will truly break into the traditional financial system. Bitcoin exchange-traded funds, ETFs, are investment vehicles designed to provide investors with exposure to Bitcoin without requiring them to directly own or manage the cryptocurrency. These funds track the price of Bitcoin, allowing investors to trade shares on traditional stock exchanges, much like stocks or commodities. This simplifies the process of investing in Bitcoin, as it removes the complexities of managing digital wallets and private keys, while also offering a regulated and familiar framework for participation. The significance of Bitcoin ETFs lies in their potential to bridge the gap between traditional financial markets and the burgeoning world of cryptocurrencies. For institutional investors, ETFs provide a streamlined and compliant way to gain exposure to Bitcoin, which could lead to increased mainstream adoption and higher liquidity in the cryptocurrency market. Retail investors, on the other hand, benefit from the accessibility and reduced risks associated with direct crypto ownership, such as hacking or mismanagement of funds. Many investors are eager for Bitcoin ETF approval because it represents a major step toward legitimizing cryptocurrencies as a viable asset class. An approved ETF could bring a wave of capital from institutional and retail investors who have been hesitant to enter the market due to its perceived risks and complexities. Furthermore, it could set the stage for broader acceptance of digital assets, paving the way for future innovations in financial products linked to blockchain technology. For these reasons, the anticipation surrounding Bitcoin ETFs continues to grow, with many seeing them as a catalyst for the next phase of cryptocurrency's evolution. The approval of a Bitcoin ETF has been hindered by several regulatory challenges, primarily rooted in concerns about market integrity and investor protection. One of the most significant barriers is the risk of market manipulation. Bitcoin's decentralized nature and the prevalence of unregulated exchanges make its price more susceptible to artificial manipulation. Regulators worry that such practices could harm investors and undermine trust in financial markets. Another key issue is the lack of comprehensive oversight and surveillance in cryptocurrency markets. Unlike traditional financial markets, many Bitcoin exchanges operate with minimal regulation, which complicates efforts to ensure transparency and fair trading practices. Without robust monitoring mechanisms, the SEC remains cautious about approving a financial product linked to such a volatile and loosely governed market. Investor protection is also a top priority for regulators. Bitcoin's extreme price volatility raises concerns about exposing retail investors to significant losses, particularly if they are drawn to an ETF without fully understanding the risks. The SEC has repeatedly emphasized the need for safeguards that ensure the fund operates in a way that minimizes risks to participants. Custody and security are additional hurdles. The safe storage of Bitcoin, whether held directly by the ETF or through third-party custodians, poses challenges due to the risk of hacking, theft, or mismanagement. Regulators need reassurance that the underlying assets of an ETF will be adequately protected. Lastly, there is skepticism about the maturity and stability of the Bitcoin market. Concerns about liquidity and the potential for abrupt price swings make regulators wary of endorsing a product that could amplify market instability. Legal and policy uncertainty surrounding cryptocurrency also play a role, as regulators await clearer frameworks for digital asset governance. These challenges collectively explain why Bitcoin ETF approvals have been delayed, despite growing demand and increasing institutional interest. Addressing these issues will be critical for achieving regulatory approval and unlocking the full potential of Bitcoin ETFs in the financial ecosystem. The current state of Bitcoin ETFs reflects a dynamic interplay between persistent regulatory hurdles and growing anticipation among investors and industry stakeholders. In recent years, several high-profile firms, including BlackRock, Fidelity, and ARK Invest, have filed applications for spot Bitcoin ETFs, reigniting optimism about potential approval. These filings underscore the mounting interest from institutional players, who view ETFs as a gateway for broader cryptocurrency adoption in traditional financial markets. From the regulator's perspective, the SEC remains cautious. The agency has consistently cited concerns about market manipulation, insufficient oversight of Bitcoin trading venues, and the need for robust investor protections. While the SEC has approved Bitcoin futures ETFs, which derive their value from regulated futures contracts, it continues to withhold approval for spot ETFs, which directly track the price of Bitcoin. The SEC's stance reflects a desire to ensure that the underlying market is free from manipulation and operates under sufficient regulatory oversight before allowing a product that could impact a wide range of investors. The cryptocurrency community views Bitcoin ETFs as a significant milestone for legitimizing digital assets. Many proponents argue that an approved spot Bitcoin ETF would provide a safer and more accessible investment option, reducing barriers for retail investors while attracting institutional capital. They believe it could serve as a catalyst for mainstream adoption, bringing increased liquidity and stability to the crypto market. Despite the challenges, optimism persists. Recent judicial rulings, such as the Grayscale case, where a court criticized the SEC for inconsistent decision-making, have added pressure on regulators to justify their hesitance. The growing institutional interest, coupled with advancements in custody and surveillance technologies, suggests that the industry is addressing key regulatory concerns. However, skepticism remains among some crypto enthusiasts, who worry that ETFs could centralize Bitcoin ownership and erode its decentralized ethos. The intersection of regulatory caution and market enthusiasm continues to shape the debate. While approval remains uncertain, the persistent efforts from major financial players and the evolving regulatory landscape signal that Bitcoin ETFs are edging closer to becoming a reality. If realized, they could mark a turning point in the integration of cryptocurrencies into traditional financial systems. The approval of a Bitcoin exchange-traded fund, ETF, in the US has faced significant challenges due to concerns raised by regulators like the SEC. One of the primary issues is the potential for market manipulation. Bitcoin markets, being decentralized and often unregulated, pose risks of price manipulation that could harm investors. Another concern is the lack of robust surveillance and regulation across cryptocurrency exchanges. Unlike traditional financial markets, many crypto exchanges do not operate under strict oversight, making it difficult to ensure fair practices. Custody and security also remain critical hurdles, as the risk of hacking, theft, or loss needs to be thoroughly addressed to satisfy regulatory standards. The SEC is deeply focused on investor protection. Bitcoin's inherent volatility and speculative nature make regulators cautious about approving an ETF that might expose retail investors to significant risks. Additionally, the SEC has questioned whether the Bitcoin market is mature and liquid enough to support an ETF without excessive volatility. Legal and policy uncertainty surrounding cryptocurrencies and blockchain technology have further slowed progress. Clearer guidelines from lawmakers and regulators are needed to pave the way for an ETF approval. While Bitcoin futures ETFs have been approved, the SEC is still hesitant about spot ETFs due to concerns about pricing reliability from unregulated exchanges. Recent developments, such as growing institutional interest and high-profile filings like BlackRock's, have reignited optimism. If market oversight and investor protections improve, the chances for a spot Bitcoin ETF approval may increase, but the timeline remains uncertain. What are your thoughts on Bitcoin ETFs? Do you see them as a game changer for cryptocurrency adoption or as a step that could compromise Bitcoin's decentralized nature? Share your insights in the comments below. I'd love to hear your perspective. And don't forget to check out my next video, where I'll dive deeper into the latest cryptocurrency trends and what they mean for investors like you. Stay tuned for more tips and analysis to help you navigate the exciting world of digital assets. See you there.